I think that the banks are probably good litmus tests for overall earnings in general, and I think that.
Really?
Well, I mean, I think inflation's going up, which I think will be very good for the banks because interest rates go up. That's great for the banks, and I think all those things kind of play into the same story.
All right. So, as far as J.P. Morgan goes, not bad to start with, right, Marty?
Good start to the process. Yes.
What was now you're back? You've been in there crunching the numbers, yeah.
Yes. What we saw once you could crunch the numbers is that loan growth actually, which was very benign in the first quarter. Actually, core loan growth was at 2% quarter-over-quarter growth, 7% year-over-year, which is your litmus test. In other words, if we see loan growth coming through in the bank earnings, then the economy generally is starting to percolate.
Yeah, exactly right. I mean, the economy is definitely strong. I think that's a great litmus test for where we're going.
How the financials trade out of this, that's going to be key. I mean, for the past 3 months, the financials have underperformed the S&P 500. XLF went into this earnings season for the banks down more than 1%, a little more than 1%. S&P was up by about 5%. Right. If the banks can't rally off of good earnings, having traded down into the earnings, what does that tell you as a trader?
It tells you that the overall market wants to roll over because you have the banks, to your point, down 2%, the XLF down 2%, you have industrials down 2%, and you have the technology space up 14%. And then you have discretionaries, which has a good portion of the technology space, and it up 14%. If no one else can do any of the lifting, then the market probably should roll over second half, but I don't think that's the case.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.